Let's explore further now the support measures that have been announced by National Treasury. Let's speak with Alex Gwala. He's a tax director at Deloitte Africa. Thanks very much, Alex, for joining us. So we did hear from National Treasury that they're providing some 36.2 billion rands worth of support following the KZN and Gauteng unrest. And of course, it's layered. We hear that there's about 27 billion rand of that going to the Social Relief of Distress grant, some money going to Sasria, to small businesses, as well as a contribution to the employment tax incentive. And Treasury says that they're not going to need to borrow money for this, and for now there don't seem to be any tax implications. Your take?
Yes, definitely. That's also what I had. It's interesting that they're saying there's not going to be any increase in loans. So it gives an impression that there is funds sitting somewhere waiting for us to spend. But from a tax incentives point of view, these incentives that are being announced, they're not really new, because we had them around this time last year, where we saw, for example, pay-as-you-earn that is collected by employers being deferred for a number of months before they are required to pay it. So, and that is not a loss really to the fiscals, because it gets deferred for just a few months. Yes. But they still pay it. So it's not really a loss to the fiscals. But from an interest point of view, you can argue that it is somehow of a loss. And also exercise duties, we understand that they're also going to be deferred for a number of periods. So when you look at these taxes, it's taxes really that companies act as agents on behalf of the revenue authorities in terms of the collections. So it's just to help them to fund the cash flow for a number of months. Yeah.
Now, Alex, National Treasury has talked about having managed to collect a lot more revenue than had been anticipated, and that's what's going to help it fund some of this stuff, as well as the so-called reprioritization of budgets within the Department of Trade and Industry and Competition, as well as the Small Business Development Department. But beyond the March 2022, when the grants stopped being paid out, and that's the bulk of the spending that's going to be made. The debate is going to continue around the basic income grant. The debate is going to continue around the inequity in this society, and so on and so forth. And there's going to be huge political pressure for there to be some sort of continuation of support. So then what are the tax implications there?
So for the funding of these grants, I'll call them grants, it helps, like to your point that you just made now, it helps the fact that some of the key industries, like your mining and your financial services sector, they are recovering. So as they recover, the corporate tax that is paid by them in terms of provisional taxes also increases. So that allows for the funds to be available to fund such incentives. So coming to the 350, quite frankly, when it was stopped in May, one expected that conversations are going to start to try and push for it to be a permanent feature in our lives. So what we are seeing is indication towards the reality that this might become a permanent feature in our lives. I understand. I was listening to the minister earlier. When he was asked the question, he said he doesn't know. So he doesn't say yes or no, whether this thing is going to be a permanent feature or not. He said he doesn't know. So which gives you an impression that the conversations are ongoing in terms of making it a permanent feature in terms of our overall spending as a country.
Yeah. Alex, I have so much more to ask you, but I'm advised that we do have to conclude our discussion. Thank you very much for your time. That was Alex Gwala. He's a tax director at Deloitte Africa. Let's give you the weather details.